This is about the changes in the personal income tax. So there were some changes came into effect from the 1st of January 2020. So the first one is on the employment income. The pay tax, which is called as the payee, pay as you earn, has been taken out with effect from 1st January 2020. And new tax scheme called personal advance payment advance personal income tax (APIT) came into effect with 1st of January 2020. And also there are some changes in the withholding tax as well. The first one is the final withholding tax, which was deducted earlier from your interest income and the dividend. It was taken out, and also the withholding tax on your service fees and your rent, that also taken out. So today's our discussion is basically on the employment income, and we will see how we have to assess our employment income and pay that. So on the payment side, there are two options available right now. That is, the first one is that you can ask your employer or your company to make your APIT on behalf of you. So basically, from Jan to March, whatever the amount that need to be deducted, you can ask your company to deduct it from your April salary and submit it to the Inland Revenue on or before 15th May 2020. And April onward, again, you can ask your company to deduct it from uh, your monthly salary and pay it on monthly basis to the Inland Revenue. The second one is the that is, you make the assessment and you are making the payment to the Inland Revenue. So for that, the salaries from January to March, you can make the assessments and you can submit or you can remit it to the Inland Revenue by yourself on or before 15th May 2020. And afterwards, from May onward, on quarterly basis, you can make the payment by yourself to the Inland Revenue. So what are the new relief coming with effect of 1st January? So the first one is the personal income tax relief. There will be 3 million per annum. There's a relief, and per month it would be like 250,000, and per quarter it should be 750. And there were some reliefs on the expenditure as well, which was not there earlier. Now it was the threshold is 1.2 million per annum, and it's per month it is 100,000. So you can claim your health expenditure, including the contribution to the medical scheme, and your educational expenses incurred locally could be claimed for individual and on behalf of the children, and interest paid on your housing loan, contribution made to a approved pension scheme, and expenditure incurred for purchase of equities or securities. So these are the relief. So this computation should be, you have to make on quarterly basis, and you have your quarterly employment benefit, cash and non-cash, and your lump sum payments such as bonus, and then you have the cumulative gains and profits from the from the employment, and you can deduct your personal income tax relief. Partly it is 750, as I mentioned, 250 per month earlier, and then other relief expenditure. So that is again 100,000 per month, per quarter 300,000, and based on the taxable income, you have to apply the relevant tax rate. That is, first 750,000 6%, next 750,000 12%, and on balance it is 18%. So we'll go to an illustrative which is published in the Department of Inland Revenue page. So Mr. Silva is the resident employee, private institution, and total of his last 3 month regular profit from employment, including non-cash benefit, was 960, and he received a bonus payment of 640,000 in the month of February. So you will see that total employment income 960 here, and 640 bonus payment, and we are deducting the personal income tax relief for the quarter 750, and his total taxable income is 850. And when you apply the tax table tax rate, your tax liability would be 57,000. So into the same scenario, so same example, I just add some expenditure which comes to the other expenditure relief here, and I add, that other relief on expenditure is 300,000 per month. I just take an assumption basis his allowable expenses for the quarter is 230. So only change is I added here 230,000, and then his taxable income came into 620, and then his tax liability came down to 37,200. Now you see, if we are not adding anything, or we are not claiming anything on the other relief on the expenditure, your tax liability would be 57,000, and if you have anything that you can claim, so your expenditure or the tax liability is coming down. So which option is best for you? So you have to select what's your best option. And apart from that, everybody asked me, do we need to register for the register for this, and we have to take a tin or otherwise the tax identification number for this? I would say yes. As per the Inland Revenue Act number 24 of 2017, the section 102.1 is explaining that every person is liable to furnish a return on income for the year of assessment, and this registration should be done within 30 days from the end of the assessment year. That means for this year you have to make that registration before 30th April. So if not, what would be the penalties? So if you are failed to register yourself, there will be 50,000 penalty as per the Act, section number 177. And if you are not filing a return, the Inland Revenue can make a penalty on you up to a maximum limit of 400,000 as per the section 178 subsection of 2. And there would be an interest also 1.5. So that's about the changes in the employment income. So we will meet on the next video about how to register for a tax as a tax payer. Thank you.